Hey everybody, this is Calvin Waite. I trade crypto for a living. I'm not a registered or licensed financial advisor, planner, or broker, so nothing on this channel should be taken as a recommendation to buy or sell. I also trade all of these things, so I probably have a vested interest in there. But there's plenty of entertainment value and lots of education, so this will be awesome. For those of you who didn't know, my subscription channel is live. So look at the link in the description over at cryptoinfluencers.com and you can see how I make all of my trades and what I do and what I think about everything. This channel is for more hypothetical and looking at trends, and the other one is for actual trading, so you might be interested in that. Good afternoon, everybody. It's a beautiful Monday and we are looking at Bitcoin, and I'm kind of doing a part two of the AI projections that I did on Saturday. And now that the market is closed, so I waited until the S&P500 closed for the day, and I kind of want to see how things measured up and see where there are misses and where there are opportunities, and kind of see what things are looking like going forward. So this will hopefully inform our kind of projections on what Bitcoin is going to do. So just one thing I wanted to point out before we jump into all of that is that Bitcoin has now entered this yellow zone, and this yellow zone is a result of the 100 being either sloping upwards or at least being completely flat. And this is very, very interesting. This yellow zone right here shows that the price is 100% consolidated over the past 100 days. We have at least 100 days of consolidation, and we're moving so flatly and so sideways that our 100 is even sloping upwards, and we're essentially flat for 100 days, which is a very, very long consolidation. 100 days ago is here, these little bottoms here. So we are messing with the close here is the exact level of our close here. That's why we're flickering between red and yellow right now. So for 100 days we've been consolidating. Our 200 day is still way up here. So we have $48,000 days averaging into our 200 day. That's why our 200 day is so high. It's still at looks like 27,147. So it's still coming down. If all three of them consolidate, we'll be ready to spring just crazy. But even this is just a boiling. It's a pressure cooker for volatility. When things get tight, that's when markets really start to move. Okay, so let's go look at the S&P 500 just because we just barely had a close. It was a red day, and in our last video we expected about half a week to a week of down and then a move upside to the upside. So first of all, I wanted to talk a little bit philosophically about price. So price is kind of the end result between supply and demand. And the supply side, there are buyers and sellers. The sellers own the supply. Buyers are looking to acquire supply, and so the demand is on bottom, the supply is on top, and they meet in the middle. And what's interesting about a market, as long as it's a free market, all known information is priced in. What that means is that all information that sellers have about expectations, about current market conditions, hopes and dreams for the market over the future is known, and all sellers are ordering their orders based upon what they expect the highest amount they can get for their goods. On the other side of that, all known information is given to buyers, and buyers are still willing to pay a certain amount, and right at the spread is where the highest buyer is willing to pay the most and the lowest seller is willing to pay the least. but it's a conglomerate of all the known information that exists in a market. So if a market ever starts consolidating, what that means is that all known information out there in a market has essentially found an equilibrium. So I know there's a lot of pessimism in the market, in the S&P and everything else. But if the market is truly a free market, all known information about future expectations of interest rate hikes, future expectations of inflation, of historical or whatever information people expect to have happen, it all boils down to a price. And so once you start going sideways, there's not a lot of surprises or not a lot of shocks left in the market. The only thing that is left is, if there's some unforeseen groups that are getting scared out of the market or entering the market that nobody can really predict. So, if we start going sideways, especially in the S&P 500, it means that a lot of information is priced in. And I think a lot of people are projecting, I think most of the doomsday predictions are sort of on the table. So it kind of makes me feel like it wouldn't surprise me to see things level off or even go up over the next few months. So from a logical standpoint, it does make sense. Now, the other thing that we don't know is earnings. So earnings can come out and that can push prices all over the place. But is it possible for prices to rise even when earnings are bad? And the answer to that is yes, it can. And the reason why is because expectations are priced into the market, not actuals. So if the expectations are very low and actuals are still bad, but not as low as expectations, prices can rise. And so it's really the expectation that is priced in, and it's a variance from those expectations that are not priced in. So if we're surprised and, oh my goodness, it's worse than we thought, yes, markets will drop because those realities are not priced in. It's expectations that are. Same with the opposite side. We thought things, we thought things would be bad. Turns out that they weren't as bad. So now suddenly those missed expectations get priced in and markets adjust and move with that new information. So it is interesting how that can play. So it's kind of an interesting thought to think, well, how much doomsday is already priced in? There's got to be a lot because there's a lot of doomsday floating around. And so I think that might help temper some of our worst case scenario types of predictions. And so now let's go and take an AI approach and look and see what we think can happen in the markets. First of all, let's look at a couple of realities. So what I did is I took yesterday's, Saturday's information, and I created a little bit of a sort of a future-looking thing. So in other words, I used the top 10 most closest experiences to our current market, and I created an average of those future expectations, and I did it for the same time periods. So 1 day to 3 days, 8 days out, 13 days out. What would the market do on average based on Friday's close? So on Friday's close, the average was that today we would gain 0.09%. Our median was 0.16. But we have some variance. Our worst case scenario in our data points was that we would lose 2%, and our max was gaining 1.9. So what was our day? You can see our day was a red day, and we went down 0.76%. So it's within our range. It was not our average. So the funny thing about averages is that the average is exactly the number where it'll be 50% below or 50% above. So averages are almost never exactly what happens. It's It's either 50% of the time you're higher than this number and 50% of the time you're lower. In our case, we were lower by a fair amount, but it's just gave us another data point. So tomorrow, the averages are here. So one day is a little bit hard to predict, but over the course of an average of 2 days, that hopefully should be a little bit more tempered. So tomorrow, we should be up 97 or 0.97, so almost up 1%, if you look at both of the average and the median, from yesterday's close. So we would expect a fairly strong performing day, because we're gonna the average would be that we would overcome our negative here and actually show up positive. So these are sort of the numbers that we're going to be kind of looking at and predicting to try to figure out where the market is headed next. By Wednesday's close, we should be about in the same spot. There was a worse case scenario and a better best case scenario. But you can kind of see how things didn't move too much, but they were sort of positive after a few days. By day 5 and 8 and 13, so a couple weeks from now, so 1 to 2 weeks from now, our averages are looking pretty strong, and our worst case scenarios were pretty moot. These are very muted. We have really nice best case scenarios. We have very muted worst case scenarios, and our averages look amazing. So we are expecting from this close that a week to 2 weeks from now, we should actually be pretty significantly higher. So if I take the close here, so this would have been a close of 362.79, 362.79, and multiply that by we'll say just 5%. Let's do 4%. That was a little closer to the middle ground. We'd be at 377.30, which is up here. So we would, in a couple of weeks, we would expect to have recovered back to the tops of this. And this is all based on our one data point that we tried to find the most similar historical performance day. So one other thing to think about in this data is that our calculation is the sum of the total of the percent we were wrong. So if this calc was 0, we would have an identical positive move for move. Everything would have gone up or down precisely to the exact percentage point across every single move. So that means we found another identical piece of history that did exactly the same. The fact that we are 13% off as a total means that from our 9 data points, because I took day 1, day 2, 3, 5, 8, and so on to 55, it gave me 9 data points, and across the averages, we are about 1.5% off per day. So this was the best performing point in existence that we had. So with that information, you can see that this is not going to be super precise, because we're already dealing with an estimation of historical performance that varies by a significant amount. I mean, 1.5% is nothing too small. And you can kind of see some of these, like our most accurate price would have been 0.003. And so it's kind of interesting. Our actual performance was negative 0.76%. And if you take the average of our top handful, if we get to, so let's see, where's our average? Okay, so this is 0.54, 0.56, 0.7 negative. So our top 5, if we had taken just the top 5 instead of the top 10, our top 5 experiences was negative 0.7, which is almost exact with this. So the more precise our margin of error, the better our data is. So this information was the best that we could get as of Friday. But today we just had a close, and I've moved all that information over and put it on sheet 2 here so we can have another fresh look. And you'll notice that where our best case scenario was a variance of about 13.35%, our best case scenario based on today's close is 10%. In fact, we have 6 data points that are more accurate than our best one from Friday's close. So before we get too far, let's actually look at these days and see how they performed, and then kind of look at some of the outcomes of this. So I'll zoom in a bit so we can see. So these 6 days mirror the most recent market activity closer than than our best case a week ago. So this information possibly could be more precise. Let's take a look. So I'm going to leave our current market here so we have something to compare it to. And then let's go out and find the data points that are the most precise. Our absolute best case scenario as far as mirroring our data was May 19th of this year. May 19th is this data point here. We move it over and we'll zoom in. Okay, so according to this AI, it's discovered that this close was the absolute closest mirror image of our most recent activity. And it looks pretty good. We've got a high, we've got a little bit of fluctuation here, which kind of mirrors this. Well, let's see. Let me line this up a little closer so it's easier to see. A little bit here, we got a move up here, a little move here, and most recently we had kind of a jog up and a jog down. So we had 2 days down here and 2 days down here. So this is our closest result. And interestingly, the next day is our second most accurate. So even though there are two data points here, both of these closes are most like our current day's close. So, and ridiculously close, like within 10% variance across all 9 data points, which is pretty awesome. So how did we perform? It was this situation. So it was a little bit of relief for about a month, another bit of a sell-off, and then we had a decent climb for a couple of months. So this would be the outcome of our most precise match based on our current information. Let's look at the third most like, and that is in 2008. So 2008 was a pretty significant time, as we all remember. It was July 7th is our data point. Okay, July 7th. So that is a little bit interesting, isn't it? Because here we're missing this move, but the percentage-wise and the drop that we experienced in the beginning of July, or excuse me, in 2008, July of 2008, according to our AI, this experience matched closest. This is our third closest match. So what is the results of this? It took us about a week or so. We bottomed, and then we had a bit of a climb. It was not sustained. We fell off again 2 months later, but we had a little bit of a leveling off. So we had a little bit of relief after this particular move. Okay, so that's an interesting outcome. Next one is 2002. So, sorry, my son's audible in the background. Apologize for that. Okay, so let's go to October 4th. That should be this day. Yep. Okay. So this move is similar to our most recent close. And then let's take a look and see how it performed. So this one had a couple more days. It was about 3 days of lower closes. And then we did have a couple months of relief. So that's interesting. So now let's take a look. 2010, June 7th. And the cool thing about this number is that it was similar to, some of these closes are similar to what we found on Saturday. And that's very helpful to know because that means that it really did play out. It played out quite similarly. So October, let's see, it's June 7th of 2010. So let's get in here somewhere. June 7th. Right here. So this close, let me pull it over. So this move is very similar, according to our AI, to our most recent move. So let's see how it performed. So it almost immediately went up for about 2 weeks, and then a lot of sideways. You know, we moved it into another low, but it started moving out and moved on to a correction after that. I mean, according to a lot of these, it feels like if we're not there, we're close. And I think that might play well with the philosophy that all future expectations are priced in. It would take a surprise to really throw markets, because I think there's a lot of pessimism out there. All right, let's get our last data point. Oh, you know what? It's May 18th. So May 18th is right here. So we had May 18th, 19th, and 20th show up in our data set. So every one of these closes is reminiscent of this. So a lot of our data is going to be taken from here. So now let's go back. Let's take a look at our results. So I did the same thing and took the top 10, but because of our more precise matches, our worst one in top 10 is 14% away. And in the top 10, we were all the way 17.5. So this was a pretty good variance. We only had 2 data points that were more precise than our 10th one here. So with that, hopefully we would expect our information here to be a little bit more accurate. So tomorrow we're expecting to have a positive day. It should be about anywhere from 1/4 to 0.5% on average of a green day. And let me pull this back up again. If we were to go up about 0.5%, we'd be moving up into a close back up here. We certainly still have about a worst case of -2% and best case, and worst case is loose, right? It can be worse, but from our data set, this was our worst and best. So it's a pretty decent variance, but hopefully the further we get out, we can kind of see that the same story is being told, that things are fairly level, if not flat, for a few days. About day 5, we're starting to move into the green. 8 and 13 were significantly higher on average. We sure have some worst case scenarios in our new data set. So there are some drop-offs that that we had seen in the past, and those play into our averages. But you can see how our best case scenarios are also pretty awesome. Things were probably very similar about 2 weeks out. So if I go back to the prior data set and look at our about 2 weeks out, this week to 2 weeks out is very similar. So even though there were different data points, it's telling a very similar story. So this could inform our kind of expectations for Bitcoin. And that's the entire purpose of going through this exercise. It feels like there is pressure on Bitcoin, but if in 2 weeks we are, where Bitcoin kind of acts as a spring, if the S&P is up 5% in 2 weeks, Bitcoin will most likely be up 10% or 15% in 2 weeks. So it's helping paint the story that perhaps our trading range is going to remain intact, and that our Wyckoff spring is still in play. Based on today's action, we will likely lose this line here, but I don't think that a permanent sell-off from the pressure of the broad markets is going to push us outside of our lower range. And I think that's kind of the story that this data is painting for us. So I say we just have to kind of be a little bit patient and wait and watch for things to kind of play out. And I expect that they will. I also don't think that Ethereum is going to move too much further to the downside either. It's doing an amazing consolidation, and it would take a lot of pressure to really create a lot of fear. I just think the fear on Ethereum is pretty well washed out. And that brings me to the last thing I wanted to show you guys. I wanted to go back and look at some fundamentals on Ethereum. This is unbelievable. So this is the ultrasound.money website. And late Saturday, I noticed that our supply had dropped completely off. We had slowly crept up on our supply over time. And at our very, very highest, late Saturday night, we were about 13,000 additional Ethereum that had entered the market since the merge. And then we started dropping. And this drop is due to some new project that showed up called Zen Crypto. I looked into it, and it's I don't think I agree with the economics of it, so I'm not interested in it. But what they're doing is they're minting a coin, and all you have to do to mint the coin is to essentially just pay the gas. So everyone's getting it for free, but they have to hold off for a period of time to get it. This is, I don't know. It's a new idea, but I don't know if I put a lot of weight into it. But because of that, it had burned like 1,000 Ethereum. It had absolutely been insane. And so if I go to the 1 day time frame, so over the course of a day, it had burned almost 1,300 Ethereum in a 24-hour period because of one project. So that tells you a lot about the fundamentals of Ethereum. The next DeFi craze, the next NFT craze, the next thing that comes along that people are really using a lot of gas for, our supply is going to absolutely drop. And so since the merge, we've only minted 9,000 Ethereum. And had we not done the merge, we would have added 312,000 Ethereum to the total supply. So what a massive difference. Unbelievable. Can you see a lot of fundamental pressure on Ethereum? I see a ton. The supply is almost a fixed supply. We have a couple projects, and the merge will be, we're going to be lower than at the merge. So with this kind of deflationary currency and utility and all these other things that go into Ethereum, man, it's going to take a very small match. It's only going to take a couple of moves for the crypto markets to start showing a little bit of strength. And this will be an absolute rocket ship. It's going to be a fireball, because we have 300,000 less supply, which is essentially selling pressure on this coin. And so everyone's not sure what to do. Everyone's holding. They're holding what they have, so they're not selling. They're not ready to buy in yet because of all the fears and everything out in the market. So we're really just floating in this little channel here. But man, I can see at some future point, there's going to be a catalyst, or our market is going to change, or the tenor or the flavor of crypto market's going to change. And Ethereum is going to be a massive beneficiary, because there are no coins that are just being minted hand over fist to be dumped on the market. It's unbelievable. So these numbers are incredible. It will not be, a single project has created enough Ethereum burning that we have lost 25% of the supply that was minted since the merge. So just wait till an actual, some new invention or something that comes along. It'll be unreal. And whatever Ethereum you have is going to be very rare. And that rarity is one portion of value. Okay, well, I hope that gives us some things to think about. I still feel optimistic. I feel optimistic even in the face of all of the negative news. Also, a little bit of we've had 6 down days in a row on Bitcoin, and so that can be that can weigh on you. But I just think that there are a lot of pressures out there that are that people have overreacted to. And so I feel like a lot of things are priced in, and according to the information that I'm looking at, I feel like I think there's a lot of repeats in the charts. I think we're probably going to see a little bit of bounce in the S&P. Thursday is the day that CPI numbers come out, and honestly, that's day 4. Like that's leading up to this day 5 to 7. So whatever happens on that day, it'll happen. And then the following Monday, so starting a week from now, markets could be 5% higher, according to this information. So we will watch and see how it plays out. Those of you that follow my pro channel, you know exactly the positions that I'm in. And most of these, we're waiting. Like a lot of these, we're positioning ourselves in a way that we can handle the down, but we're in a great position if things go up. So it's really kind of a sweet spot to be in, to be able to navigate downside, but totally be ready for the upside. So it's pretty awesome. Anyway, you guys have an awesome day. We will catch you all tomorrow. Thanks for making it to the end of my video. Make sure you keep those trades small. Don't force a trade. Don't get impatient. And if you want to see how all this works, please come over and check me out on the subscription channel at cryptoinfluencers.com. Again, the link is in the description.